So hello traders and investors. So in this video, I'm going to talk about one topic that is really trending at the moment, the Eldoret Forex scam.
Of criminal investigations have taken over investigations into the Eldoret Forex scam, which saw investors lose millions of shillings in investment.
So I am a trader. I've been trading markets for the last 8 years. So after watching or trying to peruse to find information about the scam, I am puzzled by people who fell for the scam, one. I'm also puzzled by the investigation being done because I feel like we're having very little information being unearthed, while we can have more information being unearthed for us to understand what really transpired. Because one, we need to know, did this guy raise money, use it to trade and lose it all? Or did this guy raise money and did not even trade a single position, like what Madoff used to do, who'd run a scam for around 30 years in the US. Now, if this guy raised money and lost it trading, I would want to know, how did he lose it? Did he lose it taking a single position? Was it too much exposure into one trade? Was it a series of losing trades? What really happened for this guy to lose all this money? Because in my view, there are a couple of red flags that stand out. The first one being, for you to be able to collect money from people, you need 2 licenses, not 1, 2, okay? One is by the Capital Markets Authority, and another one is by the central bank, which allows you to collect customer deposits, okay? So you don't just wake up and start collecting money from people, because the central bank monitors all transactions that take place in your account, and the central bank knows when you have an unusual transaction and why you have that unusual transaction. For example, there was also one scam that was being run in town some time back, but it was closed down and the assets of the guy freezed when the central bank picked that there was a lot of money flowing into that account. So that is the number one question that I'm trying to understand. If this money was raised and if this money was being transferred to the accounts, then did the money land into this guy's personal account or into this company's account? Because the company is Springmark Investment and it was run by a guy called Ambrose Mabuti. I'd also want to know from the e-citizen research, was this an officially registered company? And if it was it registered as a private limited company or what? Okay. Then you need to know the deposits. For the guys who've lost money, where were you depositing the money? Is it on the personal account of the manager, or is it in an account that was run by the company? If it was truly deposited into either accounts, where was the money transferred from these accounts? Because from a trader's perspective, you just don't wake up and lose money in markets, okay? This idea that, Forex people lose money all the time, it's, it has this and these problems. You decide how much you want to risk, you decide when to trade, you decide when not to trade, you decide when to come in, you decide when to get out of markets. So a lot of things are in your control, okay? And how much to even expose. So how comes we raise a couple of millions from people and you lose it all, okay, in the markets? Which positions did you take? How long did you even keep these accounts for? Did you trade for a year? How long was the scam run? I've tried finding some information on the internet, and there is very little that you can get about these scams that can help you moving forward. So for me, I'd always suggest that I think one, as the DCI are doing investigations, and for people to learn what to avoid in the space, we need to be able to collect more information. We need to know, how much was deposited, where it was deposited, which positions were taken. Before we even get to the idea of, there was an 18% promise of returns, or there was this likelihood that you'd get rich, I want us to first focus on the fundamentals so that we can be able to say that it is not Forex that was the problem. The product was leveraged, the product was sold, the product, the way it was packaged was the problem. First of all, you can't make 18% a month in the markets and do it sustainably over a long period of time. And if you're going to be a trader, the first thing that you should think about is you're trying to look for consistent and, more importantly, sustainable returns. So not just consistent, but consistent and sustainable. The combination of those two variables is very, very important, okay? So how comes people were told you will make 18% a month and people fell for that? Red flag number one. I think we've done a couple of videos, including several podcasts, where we've tried to share with people what to look for in a money manager, what licenses one requires for a money manager, what are realistic returns in the forex market. But I've realized people are ignorant and people do not invest based on rationality. Instead, people invest based on emotion. And from my understanding of emotions, I know emotions shut down the areas of your brain that are responsible for rational thinking. And once those areas are shut down, or at least once activities in those areas of the brain are minimized, it becomes very hard for you to think rationally. And my little research indicates that majority of the people who invested in this thing did it based on emotion. Why? They would start with small amounts, and when they'd be paid back the first or second month, what they would do is they would top up extremely, okay? And the effort for that is obviously you want to make money. But before you even top up and make more money, you need to ask yourself, what is this guy doing for them to deliver 18% return? Because if I'm delivering 18% return, if you just think about it logically, I don't even need to raise money from people. I can do it with my little money and grow it. Because if I'm doing 18% return per month, in a year I'm doing north of 200%. That means if you give me $1 million, start of January, by the time the year ends, I'll have done about 300. I'll have about 3 million. By the time the second year ends, I'll have about 9 million. And by the time the third year ends, I'll have about 20 something million if I'm doing 18% per month. I therefore don't need to raise any money from people because the rate of return I'm delivering at is enough for me to be able to grow. But the minute I tell you I'll deliver those returns and I ask you for money, be warned, okay? So I'll attach several links to the videos that we've done on scams in the forex space. I'll also attach several links to some videos that you can watch for you to get a basic idea of what really trading is about and how to look for potential money manager. I think that's also a highlight of how I can help people. You know, how can you look for a potential money manager? You know, what track records really should you pay attention to, and what specifically in a track record should you pay attention to? Because this story of people giving out money, you know, and sometimes you'll even give out cash or you're signing papers and you don't even know where your money is being placed. You don't even understand how the product works from start to end. You don't know whether Ken deposits the money in their bank for them to trade or the brokerage. The minute you have those problems, it will be very, very hard for you to make money consistently in the market. So it's a question of being patient enough to wait for the right things to materialize, and then you'll be able to make money in the markets. So be warned, take caution, and more precisely, do some due diligence for you to understand the different things that exist in the markets and the different products. Forex in itself is not bad. It's the people who are using it to scam people and the people who are giving you unrealistic hopes and unrealistic expectations that are the problem.
Here at Financial Hub, we offer the first 2 classes of our masterclass for free. In the first class, Introduction to Trading, you learn the initial overview of the concepts, principles, and practices involved in trading. In the second class, Fundamental Analysis, you learn the underlying factors driving supply and demand in the markets. You can get in touch with us by calling the number below or filling the form in the description box. Or you can visit our offices at Lavington Mall, Chandarana Building, 4th floor, office number 401.
You need to be able to get to the root cause of the problem. And the root cause of the problem is most people are ignorant about what trading is all about. And if you're ignorant about what trading is all about, then don't touch it. Just leave it alone. You know, it's not a topic that you know about. The fundamental failures in business include doing business that you do not understand. So anytime you're interested in investing in a product that you do not understand, you should really sit down and think twice, because there is no shortcut for you to make money in the markets, and there's no shortcut for you to make money anywhere in the world. with that said, I'll leave it at that, and I will really be happy if you will get more information, precisely more on the trades that were taken or on the returns or what really transpired for this guy to lose money. Because my understanding is this guy did not lose that money in the markets. Instead, this guy ran a Ponzi scheme with the idea that trading was the product, but there was no product at all in this case. Because if there was a product, we really need to know how the product worked. Instead of, if you tell me you were promising me 18 and you missed, you did 2%, I will understand that you were trying, but I'm certain that there was no trading going on at all. In fact, on the flip side, it could be we were just changing money from this guy to the other. Because if you look at all Ponzi schemes, one of the features of a Ponzi scheme is you get paid by the money of the previous guy who entered before you. And as long as there are guys coming in, the Ponzi scheme will work. It fails when people stop going into the product. So be very careful about that and take your time to understand the products that you really need to invest in for you to succeed in the long run. So with that said, I'll stop there and we'll catch up next time. Peace.